Did you know that most elite traders make the bulk of their yearly earnings during a few special situations that they absolutely crush? Well, you can learn how to do this as well. And in this video, we're going to teach you our firm's exact strategy for doing it so you can potentially supercharge your trading results. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. We hope you agree. This is the top YouTube channel to help you grow your trading account.
And like the first time I was talking with Brandon about something, and we were talking about a quant model, you go, I'm like really good with Excel. And I remember being like, I was laughing so hard. I was like, there's just the way you said it. You were like, I'm like really good with Excel. And I was like, all right, dude, let's see it. And you are. You've shown that that's a strength of yours.
I appreciate that.
Yeah, I remember that very vividly in the best way possible. So, all right, without further ado, let's jump into it. Let's talk through this trade, and I'll interrupt as needed, and then we'll have a quick Q&A in the end, but really don't want to take that much time. Dilly-dallying, we want to hit the important points and talk about how this can be applied to any of these big opportunity trades, different than any other playbook. You know, your intraday playbook will account for, you should have positive expectancy in that. That's how you begin as a trader, is that intraday playbook. You develop it, and then as you evolve as a trader, you recognize what the big opportunities are, and that's where your dynamic risk allocation really comes in. That's where dynamic effort allocation really comes in. That's where dynamic thinking comes in. But you have to start by drilling that intraday and developing the thought process and the patterns and the actions of a really successful trader to begin with. And then you get to play in this space, which we're going to talk about today. Take it away.
When going over my reviews, the one thing that I really like to review first is stock selectivity and stock selection. So on this day in particular, this was last Friday, there were multiple names that were overextended. And when you have like multiple names that are fitting a general sector of a strategy, but you have 1 or 2 names that are really, really standing out, it's so important to hone in on the stock selectivity part of your process, because making sure you're in the right names, or the broken slot machine, as Lance would say, is what's really going to define you from the other traders, and it's really what's going to define that outperformance. So in this section of my review, I highlighted a few names that were overextended, and I wrote a brief description about them. So for example, you even had like the Qs, which were reaching a point of overextension, but in my opinion, especially with the other names that were in play, there was really no reason to focus on this. Then you had MSTR. So you had the whole crypto sector as a whole becoming extended, and MSTR was reaching one of those names. But at this point, there was really no signal that would get me interested in MSTR, and then not to mention the tradability of the stock. So as far as liquidity and average volume goes, it's just not anywhere up to par as Riot or Mara. And at this point, it's just something that I'm putting on the back burner, but there's really no point for me to pay attention to it. And then you have Riot. So getting a bit more specific into my process, just clearly defined this needed to gap above 21.5 or blow off into 22s for me to look at it, and we got neither of those. So this was just off my radar at the time. And then you had NVIDIA. So NVIDIA is a mega cap that was up 3 ATRs over a 3-day period, and it was trading at the top of its range, gapping up half an ATR into a 1 ATR move higher by 10.15. This was the only other name that I was interested in, though it wasn't setting up off the open like Nikola was. Thought it was appropriate to prioritize Nikola, but once price stuffed 280s on NVIDIA, I was really focusing on NVIDIA as well.
And you had that game planned in advance. Like you knew, like you had a list, you filtered through the list. You didn't just say, I'm going to trade what's on my list. You filtered through the list, so you knew, it sounds like, how to prioritize this name and then this name and then this name. And these just are, less than 8 out of 10. So I'm not going to focus on them on a day where I have 10 out of 10 setups.
Yeah, 100%. It's all relative to the day. And in this case, NVIDIA, which would probably typically be a main focus most days. Right now it was Nikola, and then NVIDIA was sort of the secondary watch. Then we had Nikola. So price closed up around 6 ATRs the previous day, which was about 63%, and gapped up 2.5 ATRs, which was around 23% into a 1 ATR blow off top, which ended up being about a 7.5%.
Those are all criteria that fit a strategy that you have.
Yeah.
They are not criteria that anybody else needs to apply. If they want to, they can, but those are criteria that you have found that work for you.
100%. I know, elite traders that will trade a completely different setup and do so well on it. This is just what I'm using, and
Yep.
these are more so the stats from the trade. So not only does this criteria fit a strategy that I've built out, but there were simple gap stats that supported the short as well, which added to the conviction. So these were the gap stats. So the gaps above 20% were 5. The closes below open was 80%. Average percent fade from open when closing below open is negative 17%. And then the average low from open when closing below open is negative 31%. So this was over the period since Nikola first IPO'd until now. Not only did this support the fact that it could fade, but that if it did fade, we can put ourselves in an asymmetrical risk to reward opportunity to really capitalize on the trade.
And so you've gone from that general theory of I like trading NKLA to this actually has a higher probability, or at least in this case, here are some stats that are associated as to why I like trading that here. Because we will almost all of us fall victim to the idea, I like trading this stock because I think it kind of does this. And it's like, if you don't have stats to back it up, it can be very, very challenging to, in those fast moments, prioritize the right things.
Yeah, 100%.
Cool.
So another big thing that I want to highlight is collaboration. So I ended up talking through this specific idea with multiple traders in the pre-market. Every trader that I ended up talking through this idea with, they had a very similar thought process, which assures me that we're on the same page. And further, one of these traders that I was talking closely with is a 7-figure trader. He's been extremely successful. So to hear that he has not only a similar thought process, but a similar execution plan adds a lot of conviction to my idea, and it makes it very easy to talk through it in real time with this trader. What makes it especially beneficial is this trader and I have a very similar playbook, a very similar overall process.
You guys have built a rapport. You understand where he's thinking and what he's thinking. And
he's helped us build out strategies. So
but that relationship has existed for more than a year.
Yeah.
And it's just like that's the way it goes. And you've talked with a lot of other traders, and you don't have that same relationship with other traders. So you've done a couple things that kind of get you into that spot. So that's good. That's the thing. Like, you can't just ask for feedback from somebody generally, and if they have the same idea, you're like, sweet, we both have the same idea. You like ice cream? I like ice cream.
Right?
Let's be friends. That's not the way trading works. But when you find somebody who thinks similarly to you, sometimes they can be a great sounding board. So.
Yeah. And to Jeff's point, if you're talking to a trader that trades a completely different process, they could be extremely successful, but you might not find as much value from them.
Yep.
So here are the executions on NKLA. I'm going to dive deeper into them. But basically, there were 2 main trades presented, which I'm going to hop into, which was an opening drive momentum short, and then the AM blow off top, which is eventually what we got.
So the process of your trade review: stock selectivity, collaboration, the tape, thought process, what I'm happy about, mistakes that I made, how can I be better and learn from my mistakes, and then 8 going forward. Most people stop at like 2. Some people make it all the way to 5. You really have to go through all 8 to actually get anything out of this review.
100%.
And it really is an important thing. So, all right, let's jump forward. Now we're going to go to maybe the setup a little bit more. Let's go back to the chart and talk through it, if you don't mind.
Yeah, of course.
So you've done all of these things right. You've worked your selectivity process. You've done the collaborative discussion. You recognize this is a big opportunity on a big opportunity day. And now how are you processing the information coming into the open? What are you thinking? What's your checklist look like, or what's your discussion look like? Or, because we can all sit here and say, I know it's going to do this. And if it does that exact thing, then we can put the risk on and have the trade work. But the reality is we have no idea what it's going to do.
100%. Yeah, that's a great point. So
we don't care what it's going to do. We just hope it does something that fits our playbook.
Exactly. And then you execute, to your process. So, the process I've built out, I sort of have daily parameters, which is what got me initially interested into NKLA, and then I have different intraday scenarios, all backed by data that I'll fall back on. So I was game planning these with if-then scenarios. If NKLA does XYZ, then I'll look to put risk on here with a stop here. If it does this, then I'll look to put risk on here.
And you did those the night before, because I think you sent them out to a lot of people the night before.
Yeah, that's another thing. When there's bigger trade opportunities like this, I'm taking some time to prepare. Even if it doesn't take too long, I'm definitely thinking about it at least the night before. Yeah. Typically, you could recognize them setting up the night before. Yeah. So yeah, this was something that I prepared for going into the day. And one of those two scenarios was going to be an opening range flush out, which is more so playing momentum. And actually, we saw something very similar, which I highlight here on Rivian just earlier, I think the previous week, which is where you do get these overextensions. You get the flush out off the open, you get some sort of retracement to VWAP, a second leg lower, and then from there you look for the expected move. So that was my first idea going into the open, though it's important to note that this scenario does not deserve anywhere near as much risk as the second scenario, which ended up actually playing out successfully. Yeah. So the way I ended up taking the first scenario, my process personally calls for getting in about 40% on the first bid decrement. So once the first bid ends up dropping out, hitting that with momentum, playing against highs, and then adding more on the first retracement. Yeah. Though I ended up stopping out of that trade, and then from there it was looking for this blow off top trade.
Let's not jump ahead too quickly. We're gonna talk about this, and we were talking about this actually last Friday on this. This was last Friday, I believe, right? Yeah. So we were talking about it on this day, and it was like 10 o'clock or 10 o'clock, and somebody was like, "How are you not totally fried right now?" And that's what somebody was saying in the chat. Let's talk about what you just did, because this is something that hangs a lot of people up. Is you had a big time opportunity that you knew was a big time opportunity, and you allocated risk to a potential big time trade, right? Yep. You had a home run that fit your home run, right? Yep. You got stopped out. Mm-hmm. How do you feel about that in that moment?
Yeah. I mean, like, if I'm going to be honest, I mean, you're not expecting to, but I think you need to accept the risk you're allocating to a trade before you take it. Yeah. You need to be perfectly comfortable with it. And I mean, I have the statistics that backed up this specific trade, and there's a reason why I would size it with exponentially less risk, because I know if it works, it could work well, but the overall probability is probably going to be a lot less than the blow off top trade. Yep. So I stopped out of the trade. I was talking to the other guys, and they're like, hey, like, that happened, but we actually almost prefer that to happen, because now the real trade is going to set up.
It's an opportunity. It's a real opportunity.
It's an opportunity.
As frustrating as it is, yep. It's a real opportunity.
So this was actually, like, if I'm going to be honest, like, if I were to look back at this chart at the end of the day, I would almost be sad if the first trade worked and I didn't get that second opportunity.
It's so funny how that works. Because, and as traders, we that messes with us, where we're like, oh man, like, I wanted it to be harder than that.
Yeah, 100%. Because at the end of the day, I wouldn't have made anywhere as much as I did if I wasn't presented with that second opportunity where I was really able to size it.
Yep.
So that's sort of how I thought about it. So after getting stopped out of the first trade, it was time to reset. I talked with a few of the traders, and we were really looking for the second trade. Now, remember, we had a brief plan of, we're looking for the high 290s to start scaling in. And then anything above 305 to 315 is where we would really want to get big. If we got a blow-off move, which is without any real true rebid or held bid that ended up coming in. So unfortunately, we didn't get that blow-off move into the 310, 315 area we were looking for, but we did get that move into the high 290s. So this trade for me was personally, even though it was a big opportunity, was in the A- to A range, just because we didn't get that more extreme blow-off top move, which is what the data would call for. Yeah. So I ended up getting about 1/3 size on that front side move, which is what my process calls for. And then from there, I'm looking for some sorts of change of character that shows that the buyer, whether it's shorts covering or a buyer that's propping it up, chasing it, has stepped down or has gotten decremented. So we ended up getting a pretty aggressive flush out to VWAP.
And let's add one criteria. Sorry, let's add one more criteria to that trade, because what really could be happening here is that there's somebody who's forced to cover because there's a margin call that occurred, because this is essentially on its way to bankruptcy, right? Like this is a company that, It doesn't have a lot going for it that's going to save it at this point. So the fact that it was up here to begin with is ridiculous. And then you had all these other factors. But there are funds and firms and people trading who could have been short this from much lower and could be getting margin called, and particularly with the entire market and the extremeness of a lot of the names recently. So that this last move could be shorts covering. It could be a late buy program. It could be anything, or it literally could just be a margin call. And as soon as that forced buyer is done, it's done.
Yeah, 100%. I mean, there could be 100 different reasons as to why it was going up. But eventually we did get that move lower, which was really what we were looking for, that aggressive move lower to VWAP. And I did cover about 10 to 15% there. The reason why I ended up covering 10 to 15% into VWAP was because I was thinking about this example back on Rivian, which actually happened like the previous week, which was where we did get something very similar with this blow-off move on this overextended daily chart, pull back into VWAP, and then it actually soaked VWAP and then went through highs. So, this was something that was on the top of my mind. And really, when you have recent examples like this, it just makes me want to take a little bit off into VWAP to lock in some realized P&L. Yeah. And then we did end up getting the pop into 290s, which is when we do go back and look at the tape, was really the see it moment for me. Like, honestly, I would say this was the highest EV moment of the trade, which means it's really where you should be putting on the most risk. And you can put in risk, you're sizing into 290s against that 295 high. Some people played it against 3. I was playing against the 295 high, and from there, that's really what I want to see on these blow-off moves. You see the strong blow-off top, you see the signal that the buyer could have been decremented, steps down, some sort of change of character, and then you see that lower high, that pop into the high of day that you could play against. Yeah. And then from there, once we did drop out from VWAP, I felt pretty comfortable, and I felt like I was in the driver's seat. Again, I have data on this setup, and I do know once we go back through open after putting in a blow-off top like this, the chances of going back through highs is extremely low. So I felt comfortable adding on pops against VWAP here. Really just playing around with a core position and scaling around to maximize my P&L here. And I covered some into the flush out here, added back, and then the expected move that I was targeting was down into this 230 to 220 area, which comes both from the data I collected and then actually the gap stats that supported Nikola on this trade, which was about the average move to the downside and the average move to the close.
So you kind of had that general idea. It's not that you saw the puke and you were like, oh, this is perfect, I'm going to get within 10 cents of the low. You actually just like happened to do that.
Because, yeah. So seeing like that capitulatory flush out is actually a check in my favor and something I'll use to exit most of my position, though it just so happened to align with what the data was showing, which was like going into this trade, the whole idea is how can I maximize my P&L and minimize my risk in a way where I could target this expected move here, which was what I was able to do. Yeah, so something big that I always like to go over is going back to the tape.
And you'll watch, how many times in general will you watch the tape of a big time opportunity for you?
A ton of times. Like I'll go through it a lot and I'll screenshot the important moments. I'll do brief write-ups on it and then I'll go back and watch it again a few more times. I mean, I think it's so important to fall back on because trades like these ultimately don't come around that often. Yeah.
So maybe you get 10 of them a year or 8 of them a year in a normal year. I mean, I think we've scored this year like 6 out of 10 or 7 out of 10 as far as intraday trading opportunity. So yeah, maybe you get 8 of them. If we're scoring it, maybe in a year that's a 9 out of 10 or 10 out of 10 for opportunity, you get months where you have one of these every day, it feels like, or maybe 4 a month. But in reality, yeah, like there aren't that many really big opportunities like this. And that's why you have a special playbook like that. And that's why you have to do more really high quality reps. So.
Yeah, no, 100%. I couldn't agree more with that. It really does get you prepared for when the next big opportunity presents itself. So on this instance, for example, something that I did notice was that there was a seller refreshing the offer at 290s. So whenever it looked like the buyers were going to eat it up, it would refresh with more and more size, and price ultimately wouldn't budge through it. And then aligning with the next slide, what you could see is volume was really decreasing, which is exactly what I want to see on one of these lower high pops here. So with the volume getting extremely shallow and decreasing on top of the lower highs, These were some checks and favors I had that added conviction to the trade. This was another pretty good moment for me. So this was after we got that flush out below VWAP. We tried bouncing and we held below VWAP. We didn't even test VWAP, and now we were putting in another lower high. Personally, I'm a bit hesitant to really get size onto that first bounce, just because I've seen so many overextension short trades. Well, they'll flush out, shorts would become aggressive, and then they'll just bounce a lot further than people would think because shorts got too aggressive and they're all covering at once to the upside. So I will add some size on that pop, but I'm really waiting to get more aggressive once it's proven to me that it could fail and hold below VWAP and then give me another lower high to get into there. So this was another thing that I noticed. There was this big test at this 253 area. There were two really big bids there, and I wanted to see them get decremented pretty quickly. I mean, with the amount of volume we were trading, while this was bigger size on the tape, I felt like this should get decremented pretty easily. Which it did end up doing within about 3 seconds. So
3 seconds.
Yeah, this gave me really all the conviction I needed at this point to stay in the trade and hold for the.
I mean, you literally just gave us 3 very simple but incredibly powerful reading the tape lessons.
Yeah,
and I bet you in any of your top trades you can find 2 or 3 or 4 just straight from the book, really high quality reading the tape lessons.
Yeah, thank you. Yeah, I mean, typically like the best trades will offer that, and it will give you the conviction from the tape you need to really.
It's amazing, right? Like as much as the chart says it all, then you find those moments on the tape and you're like, yes, that's it. And if you don't study them, then it's tough to really add the right amount of size that, your biggest threat in this trade is actually being, and our risk manager would hate us for talking about this, your biggest threat's being undersized.
Oh, definitely. 100%.
Yeah. The biggest risk to you is being undersized in a see it moment in an A+ home run trade.
Yeah, I couldn't agree more with that. And it goes back to something that Lance said. It's like in this moment, like the rookie trader is saying, like, what if I draw down on this? But the 7-figure trading is saying this trade is going to get me out of my drawdown.
Yeah.
Right.
Yeah.
That's really how you have to think about these bigger opportunities.
Yeah.
So now to go over the final part of my review. So some things that I'm happy about. So, and I try to make these very brief. You don't have to go into write like an essay or anything. I just make more so bullet points. But was holding the majority of the size for the expected move and really pushing size once the trade started working in my favor. And then secondly, not getting emotional on the pops when I had on size and taking covers. That would in reality just hurt my expected value.
So let's talk about why you wrote what I'm happy about. And this will be different for everybody. But those are 2 things that I'm guessing you struggled with previously.
Yeah. Yep. 100%.
And so you're talking about not, I'm happy that this trade worked. No, you're talking about something specifically that you've been working on that you've needed to work on in these big opportunities. Yeah. And you got an opportunity to work on it and you worked on it.
Yeah, no, that's spot on. So it is more than just being like, what are you happy about? But things that you've struggled with in the past that you've been able to overcome and seen clear improvement on.
Yep.
Yeah, so going to some mistakes that I made. At the highs of this trade, I ended up drawing down about 15% of a stop. And in grand scheme of things, while this may not seem that bad, I honestly could have been closer to 10% of a stop. And this falls back to because this was like more of an A- trade to me. And that's just something that I set out for myself. Maybe that's not going to be how everybody looks at it, but it's more of a personal goal for me. I thought I could have gotten a bit bigger into the 253 area.
That's a really interesting goal, right? Is not how could I got to this size, it's how could I have been 20% bigger in a specific area.
Yeah,
right?
100%.
And that's super powerful. And the reason why it's so important to stay on these mistakes is not, man, I sucked or I could have done this better or anything like that. It's because you literally want the white slide to flip to the blue slide next time. Yeah. Like you want that to be, what am I happy about? And then you'll still be able to identify mistakes you made. But that's the reality of trading. If you can take what's on the white slide and when you learn and when you actually apply it and you practice it, when you can take the things that are on the white slide and then they become what you're happy about the next time, that's progress. If you find those same mistakes over and over and over again, maybe you should just rethink the entire way you're executing the trade, because really the mistakes are pointed out so you can grow and so you can improve on them, not so that you can just lament about how much it sucked or whatever, right? Like this should be, this white slide, what mistakes did I make, should be within 1 or 2 trades what am I happy about in this trade?
Yeah, no, I couldn't agree more with that. So obviously going into the next trades, these will be on the top of my priority. How can I get bigger in this moment? And then the last thing was not trailing a portion of my position and rather exiting the full position into weakness. Now, this is something that I'm more so reflecting on rather than saying a mistake I made because it's not a part of my process right now. So it's very important to recognize that, but it's something saying maybe going forward, this is something that I can improve on. So it's just something to consider.
Yep.
And then how can I be better? So this is more so going back to the last slide and sort of putting those words into action and building out a process as to how I can do that. So the last portion of size on NKLA should be taken out by a trailing position. You really need to use your imagination on these trades. I recommended using something simple like the previous 2-minute or 5-minute bar highs, or even a short-term moving average where you could trail the position with that. And then the second thing is be prepared for re-entries, even if the trade was successful and you're up a lot. Those are the times you really press it, even when given a solid opportunity. Take advantage of any opportunity.
It feels weird at first, right? The first couple times you're up a lot, you're like, ew, wow, that was really cool. And then immediately there's almost a sense of regret of like, but I could have been so much bigger. I should have been so much bigger. Why did I not? And then you remind yourself, yeah, I was up a lot and that felt cool and all that stuff. But like, I don't think NKLA cared that you were up a lot.
Oh, exactly.
I don't think the people that needed to get out of their longs or were putting on shorts that are thinking this is going to go to zero. I don't think they cared that you were up a lot. They were the trade was just happening outside of you.
So yeah, one thing that
the only people that cared that you were up a lot were you and the other people on our desk and the other people in your pod who were very happy for you. Those are the people that cared.
And that's about it. It doesn't go past that.
No, Goldman Sachs didn't call us up and say, we're super happy that Brandon's up a bunch today. Nice job, guys. Nope, they didn't call us up and say that. I didn't see any other traders on the street come up and be like, dude, really happy for you.
Once you walk out of that elevator, it's a completely normal day.
Nobody cares. Nobody cares. Yep.
So one thing that I always think back to was when reviewing something about really hammering the biggest days, even if you're up, was back in March. Something that Shark did extremely well on the banking crisis was, he wasn't just taking the first leg, but he stayed at it like all day. He capitalized on the second leg bounce, the third leg bounce, and that's something we asked him about in his monthly review. And he said that's what it's really all about, just making sure you're taking advantage of every opportunity. Because even if it's like on a specific day, like there may be a not good opportunity relative to other opportunities on the day, but then relative to like a low opportunity day, that might be like a really good opportunity. So you need to think about it in that sense as well and just take advantage to any opportunity you're given.
And particularly, mainly because specifically because you've done so much work to get yourself ready for this one opportunity. It's like, don't let yourself do all the work to get ready for it and be up a pretty good amount in it and then forget about it. And even just the awareness that I need to stick with this because this could be really good. That was about a best case outcome for that trade, right?
Yep.
Still, the next day matters. The next day matters.
Exactly.
The other names on your list still matter.
100%.
NVIDIA gave one of the best day twos we saw yesterday.
Yeah.
It righted a 2-day VWAP failure. I think it dropped 10 points in 4 minutes, right? Like classic day two. So that is something that you want to make sure you're staying with is a lot of times we forget or that's probably one of the easiest money layups that we see people miss is because you do all the work to get ready for the name and then you get one piece of that name and you nail it. And then the next piece you kind of don't stay involved in. And so it's awesome that you're aware of that going forward. So
thank you. So, and then the last thing I wanted to note was that these series of trades were setting up for a little bit now. So I was glad I was able to take advantage of them. And then just some brief game planning going into the following weeks where I said, even though these did play out specifically, there are some Bitcoin names that are still setting up that I'll be keeping an eye on for the overextension shorts.
I want to thank you because we have seen you struggle with this process for over a period of time. We've seen you refine it. And most importantly, I've seen you want this. I've seen you actually want to be a big time trader in big time trades. And for you to actually do that is really cool to see. But again, on the grand scope of where you are, it feels like you're like way up here on a curve from where you were, and where we're looking at it, you're still right here.
Right?
So it's really exciting. But if you implement this process over and over and over again, You think about the basketball players that make it to the NBA. How many thousands of a specific move have they made? How many reps of a specific practice routine have they done? And that plays out over a period of time. If you think about elite level, anybody, it's what they do every day that ultimately you look back and you're like, wow, how'd they get to where they were? And it's by doing a process like this. It's by committing to it and staying consistent with it over this long period of time. So it's not just the, wow, you crushed this trade. It's this is a celebration of your process.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.